down 42.7% in 2022. Is Penn National Gaming stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is revenue growth quarterly going back to before 2014. And you see moderate revenue growth from Penn National Gaming. Of course, it operates regional brick and mortar casinos, and more recently, it's gotten into mobile gaming, right? Offering a sports book, buying a sports book, making an acquisition of a couple of $1 billion of a mobile sports book, buying Barstool Sports, and to get itself into the mobile gaming. And um, uh, also, another thing to note, the crash here in revenue is because it had to close a lot of its brick and mortar casinos during the earlier stages of the pandemic. But ever since it reopened, it's exploded. Look at that, over 300% revenue growth when it reopened, far higher than it was before. And 7.5% revenue growth in its most recent quarter as it's decelerated. But still, all the data I'm looking at shows that consumers are spending more of their money on away from home experiences like going to a casino, and that's going to benefit Penn National Gaming for the next at least a few more quarters. This is true for restaurant companies. I'm seeing this for theme park companies. I'm seeing this in the data for attendance in theme parks, attendance in concerts. I'm seeing this across the board. People want to get out and spend money away from home. They've already bought the TVs that they need. They've already bought the electronics. They've upgraded their home office, all of that stuff. Now, after being cooped up at home for a little over 2 years, they want to get out, and this is going to be good news for Penn National Gaming for several quarters more. The next metric I'm going to look at is Penn National Gaming's operating income, and you could see a very nice steady increase in its operating income. Of course, this big crash here was when it had to shut down its stores, but other than that, if you exclude that, and there's the offsetting jump in operating income following the drop off, so it kind of they actually ended up better than the drop off here. The loss was 200 million. The peak profit was over 400 million, so they more than made up for the losses during the pandemic. And now operating income of 241 million in its most recent quarter is higher than any peak before the outbreak, and so the company is better than it ever was. And now one of the things actually that I liked about Penn National Gaming's rollout of its mobile sportsbook, of its online gaming, is that it's taking on a conservative approach to its online gaming rollout, right? Other competitors, like for instance DraftKings, which is another mobile gaming platform you may have heard of, DraftKings has been very aggressive in promotions, in advertising, in marketing, in trying to attract customers. And what Penn National Gaming has done since the very beginning, management has reiterated this every quarter, is that they're taking a more conservative approach to their expansion, to their rollout. They're not trying to blitz the advertising campaign and blitz the ad channels and try and attract millions of customers to begin with. They're taking a slower, steadier approach, and that's allowing them to grow and expand into the market without taking on big losses the way that DraftKings is doing. DraftKings is losing a lot of money on the bottom line, and you could see Penn National Gaming does not want to do that. Does not want to lose a lot of money on the bottom line, but it still wants to expand into that market. So I like that approach. I like that prudent financial approach, and this is good news for those looking to invest in Penn National Gaming. Next thing I want to look at is its cash flow from operations. And again, similar with its operating income, we see nice increases and a really big boost in its most, ever since reopening has begun, gained momentum, and it generated 323 million in its most recent quarter, near the highest it's ever generated, and of course way higher than the peak before, which was closer to 150 million before the outbreak. So things are looking good for Penn National Gaming, and the prospects look continue to look good over the next several quarters. I don't know how much longer consumers will continue unleashing this pent up demand for away from home experiences, but I feel like it's going to be for at least another quarter or two. All the data suggests that this is continuing to persist. So there does not seem to be an end in sight in the near term. This is where consumers want to spend their money right now, and that's good news for Penn National Gaming. So finally, let's look at its valuation, and looking at its forward price to earnings ratio of 17.27, it's the lowest it's been since January of 2021. That's really good news. And then if we look at its price to free cash flow, it's also the lowest it's been going back to, let's say, July of 2020. So Penn National Gaming's got good prospects going forward. It's rolling out a growth segment of its business in the mobile gaming, while its near-term brick and mortar business, its cash cow, is doing really well and is trading inexpensively. So you will not be surprised to hear that, yes, I will say Penn National Gaming is an excellent stock to buy for 2023. All right, that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.